With us, Nigeria's economy has recorded a significant milestone in June as the nation's foreign reserves rose to $38.4 billion, reflecting renewed confidence in ongoing economic reforms. This marks the highest reserve level in over a year, following months of strategic fiscal and monetary adjustments. According to the central bank, the growth is attributed to President Bola Tinubu's reform agenda, which includes fuel subsidy removal, exchange rate unification, and strengthened revenue mobilization efforts. While inflation and currency volatility remain a challenge, analysts view the rising reserves as a sign of macroeconomic stabilization and improved external liquidity. The federal government has reiterated its commitment to sustaining reforms aimed at fostering long-term economic resilience and inclusive national growth. Well, joining us for this conversation is the CEO of Finance with Muktar Mohammed. Good morning. Thank you for joining us on the program this morning.
Thank you for having me. So sorry, I was held in traffic, so
obviously
I couldn't make it to your station.
Obviously.
Is he coming in?
Anyway, this rise in our external reserve, analysts say or view this as a sign of macroeconomic stabilization and improved external liquidity. Do you see it as such?
Well, maybe macroeconomic stabilization, I don't attribute to that, but as to our external reserve, definitely yes, because macroeconomic stabilization have to do with a lot. You'll be talking about monetary policy stabilization, you'll be talking about physical stabilization, but in terms of for our reserve, I think I totally agree with you. But I think the macroeconomic stabilization is work in progress. We're not there yet. When you talk about stabilization, you're talking about running a microeconomy on autopilot on particular agenda or particular policies. As it stands now, some of these policies are being reviewed as things evolve. You know what I'm saying, because inflation, you cannot say inflation is going to stay the way it is today, because or just yesterday, because of the crisis between Iran and the Israelis, we are now beginning to see oil price, even local refining price have gone up. So those are what does not create macroeconomic stability, because we are an oil-driven economy or we are a PMS-driven economy, especially locally. So any distortion does not create stabilization.
Okay, I like things broken down to layman level. Now, the foreign reserve has gone up 38.4 billion in June. Tell the man on the street what this means for him.
Well, for the man on the street, knowing that most of what we consume, we import, and when we don't import, the machineries to make it finished product we import. To the man on the street, what it's telling you now is that we are having stability in the exchange rate that could lead to reduction in price of commodities. But again, for the man on the street, they want that reduction immediately. But it's a gradual process. You and I agree that finally we are getting stability in terms of price stability. Before now, when you buy a product today, we go back there tomorrow, the price is astronomically higher than what it was yesterday. So, but now you can say, okay, for months by month, you begin to get stability. So once you get those stabilities in terms of price, then you begin to look at, once the rate begin to come down, then you begin to deal with the supply side of it. And once the supply side of it is handled, then the demand is there also. You see those price begin to come down. But for now, I think what it means for the layman on the street is that if you buy bread today at 5 naira, you go back tomorrow, you go back next week, you go back by the end of the month. Maybe in 2 months' time, you still see bread at 5 naira. That's what it means to the man on the street.
Okay, thank you.
Thank you so much for joining us. And we're hearing that these reserves are reportedly being, they've been increased, and that is great news. But could you please break down what exactly is driving this rise? And does it really reflect real economic strength, or it's just short-term inflows?
No, it reviews the economic strength, because again, what it means is that you are earning more. Nigeria earn FX into the foreign reserve four ways. We earn through sale of crude. So what it means that our crude oil sales have improved. We earn through a non-oil sector also. What it means that our non-oil sector is bringing in trade, is bringing in effects into our economy. We earn through that remittance, foreign direct investment or foreign portfolio investors. That what it means is that foreign portfolios and both whether foreign direct or portfolio investors are coming into our country. We earn revenue also through remittance from Nigeria and the diaspora. What it means is that Nigeria and the diaspora are remitting. So that is what it does for our reserve. When these four streets are working, and then definitely then our reserve will definitely improve. So what we are seeing now is an improvement in oil revenue, foreign direct investor, foreign portfolio investor, remittance from Nigeria and the diaspora. So that is good for our economy.
All right, amazing. And we're happy to hear news like this. I particularly am very excited when I hear news like this. But the question I want to ask you is, so we've seen that we've done well, we have more money. Are we going to focus on our roads, focus on infrastructure and other things that needs to be done? What are we going to use those extra monies we have for?
I listened to you just now. You're excited about the infrastructure. You're even clapping for them. So I think that's what it means. What it means is that we are beginning to use the money to build infrastructures. But I think the challenge will be in terms of social investment in the area of healthcare and education. I think that is where we need to build more in terms of manpower. Because Nigeria is always good at building infrastructures, but we need to also begin to look at the manpower. Because most of this infrastructure that we are building are being managed also by foreigners. Most of the companies that are building these infrastructures, a particular nation. So they want to build and they want to operate, they want to be here for a long time. If you don't develop your manpower, you will not be able to take advantage of that when they are gone. And so when the road gets bad again, you are now bringing them back, and that will cost more funding. And I think the government also, while we're seeing what we are seeing in the foreign reserve also, they are also looking at area of diversifying the economy. And in diversification this time, they are not just looking at agriculture, they are looking at the PPP, public-private partnership, where some private companies are taking up road constructions and are doing it, and they are getting tax rebate. That also is a game changer when you want to maintain your foreign reserve and continue to see it grow. And also the floating of the naira, yes, it has also helped in the sense that you don't see those round tipping that you used to see before now. So like the CBN said, they've made the naira competitive. So after competitiveness, what we are expecting to continue to see the kind of growth we are seeing is to make the naira stable.
Interesting, and that's where my next question is. When we're talking about stability, we see what is going on between Iran and Israel, even though the U.S. has stepped in, so to speak, to addressing it, and we're still seeing what is going on between Ukraine and Russia. How do we ensure that this stability that we are seeing is sustained and insulated from external shocks?
Veronica, the world is a global village. You cannot be insulated from external shocks. What you need to do is to continue to maintain your priority and get your priority right, which I think the government is doing now in terms of reserve. What we need to do more is when things like this happens, when those crises continue, it's an avenue for Nigeria to earn more revenue. And how do we earn more revenue as a country? It's okay. It also has to do with if we are able to also be able to improve our production capability, especially in the area of oil, because what it means is that the price of oil will definitely go up. And once the price of oil goes up, then we begin to earn more. But the challenge will be, will we be able to produce more to meet our OPEC quota, to meet our domestic refining capability also? Now, that will come with its own challenge, which like we have seen it now in terms of local refining price goes up. But the government also have done well by that the naira to dollar crude deal. That has also helped in maintaining stability also in that space. What otherwise would have been same price would have gone up very high. Veronica, remember those days, when we were paying subsidy, by now you would have been saying that subsidy would have increased or threefold. But what we are saying, because of that naira to dollar crude deal, we are not seeing those increments in local production. So what we need to do is If it goes up, definitely bring more money to us. But in bringing in more money to us, what are we going to do with the money is more or less see how we can continue to see those infrastructure comes up, to use those money as a buffer to go to the non-oil sector, help them. Those are things that we should do. And again, we've already set in place a process that will make the price of local PMS, local petroleum product not go up astronomically. So those are what we should continue to do. But again, if we want to enjoy it, then we need to improve production.
Okay, I'm looking at the non-oil sector now. With the good results we're having concerning our foreign reserve, if the government decides to invest more on the non-oil sector, is it going to affect the foreign reserve positively or negatively, taking everything you know about it into consideration?
It definitely will be positive. That means you are spreading your risks. It's like having a second stream of income. You say multiple stream of income. You don't just get your income from one sources. So if the government happens to do that, yes, that would definitely be good. And you see, if you look at our revenue these days, if you look at MBS data, you realize the non-oil sector is doing very, very well. But in terms of value compared to the crude, when I mean of value in terms of bringing earnings, where the non-oil sector is delivering about 93% or even 80% to our earnings. But when you look at the value they are placing in terms of dollar value, you realize that it's low compared to just 20% that crude oil sales is bringing. So what we need to do is to improve those areas in terms of turnover, and then also begin to look at value chains in the agricultural sector, especially how we can begin to exploit those value chains to create more export of non-oil sector. Because sometimes the challenge has always been when you are exporting this product, areas of value chain in the area of preservation is very challenging.
Okay, so let me come to you on transparency. We've heard a couple of times, that the National Reserve can just be dressed to look a certain amount when it's not. What level of transparency do we have?
Well, give it to the current CBN management team. I think they have been very transparent enough. Audited results are being released, but even if we are still waiting for the last year audited result, hopefully we should get that anytime soon. They have been transparent in terms of, like I just said, in the exchange rate market, in the foreign exchange market. You could see a little bit of transparency in the exchange rate, and that also is helping drive those transparency. I think they are very, very transparent in this as it stands now. It will take a little, because they normally give us monthly details. Sometimes you see the reserve goes down, and they tell you the reason why it goes down. And recently, they normally intervene in the foreign exchange market to bring stability, to maintain price equilibrium, which I've always said that nobody, no central bank anywhere in the world lifts its currency to market forces. So they have been transparent in telling us, but also you shouldn't forget that also their transparency also includes the area where they tell us that when this reserve goes down is because of debt payment. That also is a big challenge.
But quickly to follow up, to put you on the spot, from 1 to 10, how would you rate the transparency?
Give them 8.
8, okay.
But very quickly, if this is good news, like I said, but if Nigeria's foreign reserves are rising, why is there still so much pressure on the naira and high inflation rates? When we get news like this, there's often a big disconnection between these economic headlines and street level reality for everyday Nigerians.
It will continue to be like that because, again, there's a distortion. Like I just said, some of these prices are good, but again, we have distortion in terms of the foreign exchange market. We've not created that stability yet. So until we create that stability, and like I said, we maintain a price equilibrium, price stability, then you begin to see that there's no that distortion. But I agree with you totally, because the ordinary man on the street is not seeing value in the reserve. It's just like if economists will tell you that if there's value in the reserve, then we need to begin to see stability in the exchange market. We need to see a fixed rate. That is the main challenge. Until we get to that point whereby the naira is very stable, then it will now begin to impact on the ordinary Nigerians in the area, that you attract more companies into Nigeria, they create more jobs, you get these foreign direct investors, you get portfolio investors coming, they are coming in gradually, if you look at the data from the Nigerian Stock Exchange. So yes, there's a distortion, but again, like I always say, we did not come here by accident, and we're not going to live here by accident. We have to continue to put in the work in terms of structural works. But what we've seen before now was whereby there was abuse in terms of the foreign exchange market. And so you begin to see the high reserve. But in reality, when you look at the forward payment and others, you realize that they are not the way they is. But now I think we are getting to get reality. The CBN sometimes intervene in this market to create stability and price equilibrium. So definitely, I believe strongly, like I've said, if you are a lady, you've gone to the market, you see that prices are not as they used to be before, whereby you go today, it is 1,000, then you go the next day, it is 1,200. So these things will be gradual. I think the policy will work, but again, we need to be patient and keep on, and the government keep being sincere and open and make sure that policies are being implemented. We don't suffer policy somersault.
Interesting. The matter of patience, Nigerians have heard it for quite some time now and are still wondering how long they have to be patient for the government, for these things to begin to trickle down to their table and their daily life. But let's look at how this will influence our viability outside the country. You talked about attracting portfolio investors and all of it. We just saw Brazil and Nigeria, signing over about 30 MOUs yesterday, and we are deepening relationships. How will that improve on the long run, since we are willing to now put in the work? And also, how does this make us look when we are talking about access to international capital markets?
You just need to look at Veronica, you don't have to go too far. Look at the exchange, the Nigerian Stock Exchange. They've been enjoying some of these foreign investors, especially portfolio investors. You look at the bank recapitalization, also it's attracting more foreign investors into Nigeria. And by the time this recapitalization is completed in March, you see that we would have attracted more foreign investors. What it means for us, like you just said about the Brazilian deal also, that is also good for us because that's one of the largest economy in the world. So once your economy becomes stable, once your economy begins to create a little stability, then you begin to attract the right investors. And then when they start to come, remember, it's not just investors coming in, but again, coming in to establish their company here and create jobs for the ordinary Nigerians. And that is why I believe that we need to begin to develop our manpower to take advantage of some of these opportunities that will soon be available in all corners. So for me, yes, I totally agree with you. Yes, there's that trickling down, that patient. When we talk about patient, we are not saying that you should be patient forever. What we talk about patient is that Nigerian wants that. They want to see the exchange rate back to 750. They want to see the exchange rate back to 500. But what we're saying about patients is that this work must be put in terms of policy stability. And again, unfortunately, it's not really in our hands, because once there is a crisis, especially when it comes to this oil crisis that comes up, then we have a challenge like what we are seeing in terms of local price of refined petroleum products. So this is good for us. Once investors are excited about your country, they begin to come. And we've not seen, I think this is the largest foreign portfolio investors we are seeing for almost 10 years, since 2015, the last time we had foreign portfolio investment. You should also remember that, foreign direct investment. You should also remember that during President Buhari tenure, we went for as low as foreign direct investment going down as low as 96%. So what we are seeing now is that international community are beginning to have confidence in your economy. And like I said, the world is no more, the world is now a global village. And then you begin to attract, that will create stability in the exchange rate in the long run. And that will have a snowball effect in terms of business stability, interest rate coming down. Businesses are able to borrow at a low interest rate. Businesses are able to do business. And also you see that the informal sector, who is the larger employer of labor, will be the first to benefit when there is a stable exchange rate, especially in the area of monetary policy, where interest rate comes down. You see that a lot of these smaller business will begin to benefit. For now, we'll continue to see the bigger business benefiting in terms of export and also getting foreign capitals, but it will trickle down later on.
All right, you've talked about the stability of the currency and the advantage it will have on the economy and even the building of our foreign reserve. What are the factors that are slowing it down? What are the factors that are making this sustained naira stability a little bit difficult?
I just told you, I think it's more or less crude oil. We've not been able to meet our crude oil quota, and also with that which is our largest source of revenue in terms of FX revenue. So until we meet that, we are able to do that quantity that we are believing that we should do. The president put it at 2.03 million barrel per day. We've not been able to hit that. So that is most responsible. Because if you look at, like I said, in terms of portfolio investors, they are coming. In terms of foreign direct investors, they are coming. In terms of Nigerian remittance in the diaspora, they are coming in. But to augment it, to create that stability, your main source should have to earn more. And now in this case, that the main source is earning, but is not earning in terms of the kind of quantity. So that majorly is the challenge. Once that happens, you will see the rate will crash because, again, this, like I keep saying, this crude dollar deal has also helped us in maintaining price stability. Because you can imagine if Dangote also was paying in dollars and need to sort for these dollars to pay the Nigerian government, it would have been a big issue.
Very interesting. I have to say, Mr. Muktar Mohammed, you're somewhat of a unicorn. We hear all these buzzwords, foreign reserves, inflation, exchange rates. Do you think that the average Nigerian having financial literacy helps them navigate today's economy? There are very few people like you who can really break down the figures and the myths surrounding these buzzwords.
I think that is where we are talking. That's what we are talking about. We're talking about, we keep saying financial literacy is key. And that is the challenge. Like I keep saying, one of the sector that have hit the ground running in President Tinubu policy is the capital market. But unfortunately, how many Nigerians do you have in the capital market? So that is a big challenge. And that is what some regulators also, we need to continue to enlighten Nigerians of the opportunities that are in our economy. Because the average Nigerian always just think that his opportunity is just in the area of buying and selling. So there's no that financial literacy. And that is what the Security and Exchange Commission needs to do. That's what the Nigerian Stock Exchange, the capital market players need to do. We need to take this literacy to classroom, to schools, to the university campuses, for them to know that, look, opportunity arrive. Once you make that little fund, you can also begin to think of investing. You can imagine if we have up to 90% or 93% of even 60% of Nigerians playing the Nigerian stock market, today would have been seeing more of the middle class. But unfortunately, it's only the rich that play that space, and they are less than 3%. And that is the space that I've seen the kind of boom that we've not seen in terms of President Tinubu policy. It had hit the ground running in that side, especially the removal of subsidy and the floating of naira. And unfortunately, that has been what has killed the average Nigeria also. So definitely there are opportunities, but like you rightly say, financial literacy is key.
Well, moving on, this is not my question on the lighter note. This is not my question. This is a question from a viewer, because you made a statement and you said that in the market, the prices are now very low compared to before. But people are still arguing that the prices are still, a bit high compared to how they were before. And this is a statement that you made.
No, I think maybe the viewer should get me clear. I said what it was 3 months ago is not what it is today. It might not have gotten to where it was 6 months ago. You and I agree that these days you go to the supermarket, you go to the market, you buy a product today, the price difference compared to before you buy today, you go tomorrow, it's stable. And that's what I'm trying to say. Yes, we could have little distortion, especially in table item, because of insecurity, which you mentioned, or because of rising cost of petroleum product, like what we have just seen of recent. But that increment in terms of that is not as astronomical like it used to be before. That's what I'm saying.
All right, so when do we get it to how it was in 6 months? Quickly.
You said what?
When do we get it to how it was in 6 months? Anytime soon?
You see, policies and not quick fix.
Right.
So definitely we will get it. We will see price stabilize. Will it get back to where it was 6 months ago? I'm not of that, but will the exchange rate get a little bit better? Yes, I know. As we continue to improve our economy and depend more and able to build our own economy to at least be able to produce what we consume, it could be the game changer.
All right, so finally, what would be your recommendation in terms of policy stability? Because you mentioned it earlier that that's one thing that has to be done to addressing this issue.
I think the government should continue to make sure that they create more policy, especially the PPP, public-public partnership is key for me. They should continue to see why government's scarce resources are used to develop social investment like health and education. They should continue to partner with the private sector to build and operate, especially in the area of infrastructure. I mean, that's what is done globally. I don't see reasons why we should continue to put scarce government resources in construction of valuable roads that of economic value, where those roads can be given to the private sector to build and operate, and and also use their resources, and that also will be good for the economy. They should think of exploring that. Again, also, we must improve security in the Niger Delta so that we can begin to meet our OPEC quota. That is very key. We also will continue to drive those two-way exchange system, whereby foreign investors, foreign portfolio investors, foreign direct investors are able to come to our market and they are able to exit. Once that is created, continue to be created, expand, and then believe and trust come from the foreign investors, they will definitely come in. We need to create a product for the Nigerian in the diaspora. I've said it over and over. We have the Nigerian Diaspora's Commission. The central bank for now have been saying they are trying to create a product. They need to create that product whereby Nigerians in the diaspora will be able to invest in Nigeria directly, like what we do in the Eurobond, what they do through Eurobond and others. But let them bring it home. Let them be able to invest in infrastructure, and they will have confidence in doing more remittance for development rather than just sending remittance.
But some would say, if I may cut in, some would say that Nigerians are already investing in Nigerians abroad are already investing in the country. You see them in real estate. Isn't that something?
It's something, but we should. That you see, those are what we say. Those are private investment. They are good, but what the investment that should be driven by the Central Bank of Nigeria through the Nigerian Diaspora Commission. That is something that they've been talking about since. I think they should hasten it. That's what I mean.
All right, Muktar Mohammed, CEO Finance with Muktar. Thank you so much for your time on the program.
Thank you for having me. Great.
Still to come on the show, 9 weeks of uncertainty as FCT pupils' future hang in the balance due to an ongoing teachers' strike. Join us after the break for that conversation. All right, we'll link up now with Eshoma Moimodu and TJ Suadeye in our Abuja studio for FCT Brief. Good morning, guys. Over to you now.
Good morning, Veronica and the team over there.
Yeah, good morning, Etoma and Farid.